Welcome to my channel. If you follow finance, M&A, or the future of AI in business, today's video is for you. We are breaking down one of the most significant business acquisition of 2025, which is Capgemini's 3.3 billion all-cash acquisition of World Network Services Holdings. This is not just another big corporate deal. This is a signal about where the entire business process management industry is heading, from people doing work for you to AI agents doing it autonomously end to end. I've built a full 14 slide deal analysis deck covering everything: the deal structure, the financials, strategy, the risk, and what it means going forward. Let's get into it. So apparently, the deal was sealed between Capgemini, the French technology and consulting giant, acquiring World Network Service Holdings Limited, a leading global business process management company, in all-cash transaction worth approximately $3.3 billion at $76.50 per ordinary share. The deal was closed on October 17, 2025, ahead of schedule, and the story behind it is fascinating. Let me give you the executive summary first. Four numbers you need to remember. Number one is a $3.3 billion. That is total transaction value. All cash, no stock, no earnouts, no contingencies, and cash. Number two, it is $76.50 per share. That is what every World Network Service shareholder received when the deal closed, representing approximately a 32% premium over where the stock was trading before the announcement. The number three is $4 billion in bonds. Yes, you heard it right. That is how Capgemini financed the acquisition, issuing euro-dominated bonds in September 2025, canceling the original bridge loan they had set up. And the number four is October 2025, when the deal closed roughly 2 months ahead of the original expected date, which was December 2025 timeline. The speed tells you how aligned both sides were on getting this done. So let's dive into company profiles. So, who are the two players here? On the left, we have the acquired, which is Capgemini, headquartered in Paris, a global force with 350,000 employees across more than 50 countries, listed on Euronext Paris, over 55 years of heritage in technology transformation, consulting, and cloud services. The key AI platform is called Perform AI. And on the right, we have the target party, the World Network Service Holdings Limited, headquartered in Jersey with its operational heart in Mumbai, which is the financial capital of India, a global business project management leader with over 66,000 employees across 14 countries, listed on New York Stock Exchange. More than 30 years of deep expertise in running complex business operations for clients in banking, insurance, healthcare, and retail. And the plus sign in the middle, that is not just a symbol, that is the entire thesis of this deal. Two complementary strengths, one in technology and scale, one in domain expertise and data, coming together to build something neither could build alone. To understand why this deal happened, you need to understand how the business process management industry has evolved. Let's talk about the wave one, which is wage arbitrage. Companies have discovered that by moving work offshore, let's say from Philippines to India, they could do the same job at a fraction of the cost. That was the original promise of business process outsourcing. Let's talk about wave two, which is value behind cost. Companies like World Network Services started adding domains, expertise, and analytics on top of process execution. It was no longer just cheaper, but it was smarter. So wave three is the digital transformation. Let's say about cloud computing, robotic process automation, and technology began transforming how processes were run entirely. And now we have wave four, which is agentic AI. This is where we today are. AI agents that can understand, decide, and execute complex end-to-end process autonomously. Here is a key stat. While the traditional IT market is 70 to 75% already penetrated, the business process management has barely touched 25% of its potential. There is a massive 70% white space waiting to be unlocked, and agentic AI is the key. Now let me walk you through how this deal was unfolded because the timeline is actually unremarkable. So the base point is March 10, 2025, where World Network Services acquires KP AI, an AI and data analytics company, for $66 million. We will come back to this in a moment because it is a critical context. So the second point was July 6, 2025, where Capgemini and World Network Service signed the transaction agreement of $76.50 per share in all-cash transaction. So on July 4th, 24th, the World Network Services releases Q1 first year 2026 earnings and confirms the pending Capgemini deal. And on September 18, Capgemini prices of $4 billion in bond to finance the transaction was sealed, and at the last point, on October 17, 2025, the deal was closed. World Network Service Holdings Limited shares on the New York Stock Exchange ceased to exist, but World Network Services is now fully part of Capgemini Group. From signing to close, just over 3 months, that is extremely fast for a 3.3 billion cross-border transaction. Let us look at the deal mechanics in more detail. The $3.3 billion total transaction value, excluding World Network Services net financial debt, which was negligible as of March 2025. So effectively, this is the enterprise value too. Around $76.50 per ordinary share, every shareholder who held World Network Service stock at closing received that in cash. And here is an interesting governance detail: the termination fee. World Network Service agreed to pay Capgemini around $118 million if the deal was terminated around certain conditions. For example, if World Network Service walked away to accept a better offer, that is a serious commitment to completing the transaction. On the financing side, Capgemini issued a pound 4 billion in bonds in September 2025, which was in long-term fixed rate paper to replace the bridge loan and to fund the acquisition cleanly. The deal required approval from the Royal Court of Jersey, overwhelming shareholder support which it received, and regulatory clearances across multiple jurisdictions, which is, by the way, a win-win situation from both the parties. Now, the big question is, why did Capgemini want World Network Service, and why did World Network Service agree on it? So, the reason one is agentic AI leadership. The combined entity is positioned to deliver AI agent-driven end-to-end process automation at enterprise scale. Neither company could do this alone. The reason two is complementary strengths. Capgemini has global technology scale, cloud leadership, and AI platforms, whereas World Network Service has 3 decades of domain-specific data in insurance claims, financial transactions, healthcare records. You cannot build that kind of data mode overnight. Capgemini needed WNS history. Reason three is market timing. Importantly, this deal happened when both companies were doing well. The CEO, Keshav Murugesh, said it directly: the combination recognizes that the future of business driven by generative and agentic AI will be very different to the traditional models. Both sides recognize the window. And the reason four is the globalization scale. Here is something most people miss. Full network service is actually larger than Capgemini on the global business service front. This is not a small fish being eaten by a big fish. This is a merger of equal in the business process survey space with World Network Service expected to lead the combined globalization division. Let us look at the financial health of World Network Service going into this deal because of $3.3 billion price tag needs justification. In quarter 1 FY 2026, the quarter ending June 30th, 2025, World Network Service reported an revenue of $353.8 million dollars, that is up by 9.5% year over year, a strong growing business. Adjusted net income was $46 million, up from 4.5%, and the adjusted operating margin held at 18%. The company had 66.85 employees globally, added six new clients in the quarter, expanded 28 existing relationships, and maintained a lean 36 DSO. Look at the revenue bar chart. Five consecutive quarters of growth from $323 million to $354 million. This is not a distressed acquisition. Capgemini paid a premium for a healthy, growing company at a peak of its trajectory. Now here is the part of the story that most analysis misses, and I think it is the most strategically interesting piece. Just 7 months before Capgemini acquired World Network Service in March 2025, World Network Service itself made a significant acquisition. They paid around $66.1 million for KPAI, a cutting-edge analytics and AI services company, an elite Snowflake partner. Why does this matter? Because the 53.9 million goodwill on that deal, the premium over book value, was essentially a bet on AI capability. World Network Service was not just buying revenue, they were buying data engineering expertise, Snowflake capabilities, and a team of AI data scientists. CEO Murugesh said it perfectly. KPAI was a beautiful acquisition that allowed us to plug a gap in our data engineering capability. So when Capgemini came knocking, they were not just acquiring a PPM company, they were acquiring a PPM company that already started its AI transformation. The KPAI deal made World Network Service a more valuable, more AI capable target. It is a classic build then sell arc, executed beautifully. Let us talk valuation. The number behind the $3.3 billion price tag at $76.50 per share. Capgemini paid approximately a 32% premium over where World Network Service stock was trading before the announcement. That is a significant premium. Shareholders were handsomely rewarded. Annualizing quarter 1 FY 2026 revenue gives us roughly around $1.42 billion in revenue run rate. At $3.3 billion enterprise value, that is an implied EV to revenue multiple to approx 2.3 times. For a growing profitable BPM company with unique AI assets and 30 years of proprietary domain data, that multiple is defensible. You are not just paying for the current earnings, you are paying for the future AI-driven revenue potential of a combined entity that can address a market three times larger than what traditional IT services can touch. Capgemini financed with long-term bonds, not short-term paper, signaling they are thinking about this return over the decade, not just a quarter. So here is a detailed synergy framework. So what does the combined entity actually create? Let me break it down. World Network Service brings 30 years of domain data, around 66,000 trained process professionals, KPAI's data engineering stack, the SmartCube analytics platform, and deep client relationships across banking, healthcare, and retail. Capgemini brings around 3 150,000 professionals in 50 countries that perform AI agentic platforms, global cloud and consulting scale, and a strong balance sheet post the bond issuance. Combined outcome, a global leader in what is being called intelligent operation, where AI agents don't just assist humans, they orchestrate and execute entire business process end to end. As Capgemini's CEO Ayman Izzat put it, by combining Capgemini's technology and AI leadership with World Network Service industry expertise, we are uniquely positioned to help clients reinvent their business processes end to end. Now let's talk about the risk factors. No good analysis is complete without acknowledging the risks, and there are real ones here. Integration risk, which is medium, merging 66,000 World Network Service employees with 350,000 Capgemini's employees across different cultures, geographies, and systems is enormously complex. Retaining AI and analytics talent specifically will be critical. The marginal pressure is currently low but visible. Around quarter one FY 2026, the GAAP profit fell around 24.7% year-over-year, driven by KPI amortization, Capgemini transaction costs, and share-based compensation. These are one-time costs and should normalize post-close. AI disruption risk is, which is rated high, and I want to be clear about this. The entire thesis of the T rests on agentic AI delivering at a scale and speed. If AI adoption in enterprise operation is slower than expected, the revenue synergies take longer to materialize. That said, given both companies' commitment and the market tailwinds, I believe the risk is manageable, but it is real and worth watching. Post-merger outlook. So what happens next for World Network Service inside Capgemini? First, World Network Service is expected to lead the global business services division of the combined entity. Remember on globalization, the World Network Service is actually the larger player. This is not an absorption, this is a handover of leadership in an important segment. Second, KPAI, the Smart Cube, and World Network Service analytics assets are expected to be at the forefront of the combined data and AI strategy. These are the crown jewels going forward. Third, the business model itself is transforming. Contracts will increasingly be priced on outcomes, on value delivered and efficiency gained, not on hours worked or headcount deployed. This is a fundamental shift in how TPS is sold and delivered. And fourth, World Network Service is now consolidated into Capgemini's financial statement. The New York Stock Exchange listing is gone. Future performance will be reported with Capgemini segment disclosures. As CEO Murugesh said, this is not the end of World Network Service journey. It is the start of a bigger one. Let me leave you with four key takeaways from this analysis. First, our $3.3 billion valuation. This is one of the largest BPM acquisitions in the history. It signals the intelligent AI-driven business operation is the next major frontier for the enterprise value creation. Secondly, AI is the core thesis, not just reduction. This idea is about combining Capgemini's AI platform with World Network Service domain data to deliver autonomous operation at a scale. If you are investing in the AI value chain, this is a real-world example of where it is going. Thirdly, the World Network Service built itself up first. The KPAI acquisition in March 2025 was a strategic precursor. World Network Services sharpened its AI capability before entering the combination, maximizing its value. That is a smart corporate strategy. Fourth, the white space opportunity is massive. With only 25% of global business operations penetrated, the combined entities targeting a market that is three times larger than what traditional IT services can address. If you found this analysis valuable, please like the video and share it with someone in finance, consulting, or tech who would find it useful. I've also attached the full 14-slide pitch deck analysis as a PDF in the description. You can download it and use it for your own reference. Thank you for watching. See you in the next one.